Are home buyers right here in San Diego going to be losing the upper hand and it starts shifting away from a buyer's market? Here is what one longtime real estate investor just had to say.
I warned you. I really, really did that this buyer's market we were currently experiencing would not last forever. Folks, I think what we are seeing over the last 7 to 10 days is that buyer's market slowly going away. Just for example, in the last couple of days, lots of you have reached out to me, told me about your specific buy box, the activity, the pendings, the changes. Even when homes were on the market for over 100 days, they suddenly have offers and in some cases, multiple offers. On top of that, we just got mortgage data. And this is before, I want this to be very, very clear. This is before mortgage rates dropped to 6.3%. Mortgage demand jumped to the highest level in 3 years. I'll say that again. Mortgage demand jumped to the highest level in 3 years. Refi demand was up 12% week on week. Again, before mortgage rates dropped to 6.3%. They're up 34% year on year. Purchase applications are up 7% week on week and 23% year on year. I can only imagine the data that will be reported next Wednesday when the full force of the drop to 6.3% is in effect. I've talked to mortgage brokers pretty much every day since last week, and all of them have told me about the phone and their emails ringing off the hook with people looking to refi or get requalified to go shopping. Again, folks, I told you this was coming months ago. I had an interview with Lance Lambert from Resi Club. He pulled up that data, and I said September. September is going to be the month we bounce off the bottom. August was horrible. I caught up with the wonderful Beth Traverso yesterday, and August was horrible. But we are already seeing that change in September. Now, let's be very clear. I'm not saying the buyer's market is over, right? It doesn't happen that fast. But the buyer's market in much of the country could be gone in 6, 8, maybe 10 weeks.
And that is confirmed in this article. Home mortgage demand surges as rates drop to 6.35%. This was September 11th, by the way. So stay tuned because I'm going to show you where it is right now. You might be surprised. But mortgage rates are finally falling, which we haven't seen in quite a while. They've been hanging in that 6.5 to 7% range for quite some time. And they just saw their biggest weekly drop in the past year. And they say right here, mortgage rates are headed in the right direction and homebuyers have noticed as purchase applications reach the highest year-over-year growth rate in more than 4 years. As rates dropped, borrow demand surged. Applications to buy a home and to refinance were both up on a weekly and annual basis, according to Mortgage Bankers Association. Now, refis made up half of those applications. So people who maybe bought within the last year or so when they had a 7% rate, a 7.25% rate, maybe they are going to drop into a little bit lower rate. Now, purchase applications, meanwhile, rose to the highest level since July. So where are mortgage rates at right now? When he was saying this was, mortgage rate demand, it was kind of in this area before they even did drop to here. Mortgage demand was up a ton. And this has been trying to track in sideways last week. You saw a little bit of up, a little bit of down. At the end of last week, we were at 6.25. When I brought this up today, I didn't expect to see a giant drop off going to 6.13%. We're quickly approaching the 6% level for mortgage rates. And once again, this is all averages. This is like not your specific situation. If you're getting a jumbo loan, if you're getting different down payments, different credit scores, etc. So when you talk to your specific lender, these numbers could definitely be different. Could be a little bit higher, could be a little bit lower, depending on your qualifications. But either way, the trend is going to be the same for most people. That is going down. So mortgage rates and mortgages becoming more affordable. And the last time we were in this range, this is 1 year, you go all the way back to this time last year, It was literally like just about 1 year ago when we did see rates below where they were right now at 6.13, right over here on 9/17. So one day after I'm making this video from 1 year ago, it was 6.11. Now we're at 6.13. So everything he was saying, expect that to be accelerated. Expect more buyers to be getting purchase applications to potentially restart their home search. What is he talking about? A buyer's market, and are we even in a buyer's market right here in San Diego, or were we still in a seller's market? Well, let's dive into that a little bit. So understanding a buyer's market here in San Diego, what is a buyer's market? More homes for sale than active buyers, so more supply than demand. You have more people putting their home up for sale than are actually looking for homes. And that in turn, buyers are gaining a greater negotiating power. So some of the key indicators, one being high inventory. This is saying the traditional is 6+ months of supply. So how long, if no more homes came on the market, how long would it take to sell all of the current inventory right now with the current number of buyers? 6+ months. That's kind of old school. I mean, some areas are like that. I think San Diego is a little more in that 4 to 5 month supply where we start skewing towards a buyer's market. Now, we weren't quite there yet. We were trending up to that in the recent months, but we haven't hit that 4 to 5 months supply of inventory yet. Longer days on market, absolutely. Homes sit for weeks or even months. We've definitely seen that trend, and I'll show you what all these numbers are at here shortly. But we have seen that go up significantly and continuing to rise over these past few weeks. Frequent price reductions, once again, absolutely. More price reductions here in San Diego. We kind of peaked out maybe a few weeks back, and we've trended down a little bit. But compared to last year, we are definitely above where we were. You're also going to get more options, so less competitions and fewer bidding wars, less people out there to drive that price well above list price, or staying at list, maybe a little bit below list price, which is a key indicator of a buyer's market. Seller incentives, so closing cost help, repair credits, flexible terms. This was pretty much non-existent when we did like 21, 22, when we did see a ton of competition out there. There was 5, 10, 15, 20 plus buyers for every single home. So competition drove all of that out. Sellers they were in the driver's seat. They could kind of dictate what was going on. They could say no closing costs, no repair credits. They're going to go on my terms when I want to close. I need a rent back. Now we're seeing a little bit more flexibility in that. Buyers' advantages, they can negotiate stronger on price and terms, maybe coming in a little bit below list, maybe getting a little bit longer contingencies, all that kind of stuff. Request seller concessions, so maybe some stuff to be repaired, depends seller to seller. I've seen it both ways right now, where sometimes sellers are willing to help out, sometimes they are not. A lot of times we're meeting in the middle. Taking more time to decide, which is huge for buyers. It's not as much pressure as we had seen in years past, where it was like Friday, Saturday, Sunday, go see properties, choose which one, put your offers in there. They're reviewing offers on Monday. You basically had no time. Sometimes there was 15-minute showing windows where you had to get in the house and get out because the next group was there. So we're not in that time, which is really good. Less pressure from bidding wars, once again. And sellers, more adjustments, price competitively start, we've really seen that. So if you're a seller out there, these are some of the things that we have been seeing. You got to price competitively from the start. If you overshoot your number, it's going to sit longer. You're going to likely see price reduction later on. You're not going to see, maybe you'll get some showings, but you might not get any of those offers. Stage and improve conditions. That's what we always say. Preparation is a huge key when you are selling your home. Get it dialed in, because that first impression is huge. And a lot of people are making their decision from coming into that home. So make sure it's dialed in. Make sure you have improved it as much as you can, and which makes sense. Not overdoing it either, but making sense. Okay, if I invest this into staging, if I invest in this into paint, floors, etc., does that make sense on the other end? Be flexible with negotiations, which we have seen, instead of, like I said, multiple offers. Now, there have been homes where, yes, there is competition, but maybe it's like 1 or 2 other buyers out there. It's not 5 to 20, So but for sellers, being a little bit more flexible, sometimes it's that one offer. So maybe they didn't come in directly at your price, but you want to negotiate in a few other terms. So you could also expect longer timelines to sell, which is a lot of the things we have been seeing right here in San Diego. So let's talk inventory, new listings. This is adding to the inventory that is on the market. If this number is going up, we're gonna see a lot more new listings come on. And if they are taking longer to sell, it's gonna build up, adding to the active listings, which I'll show you here in a sec. But as of now, we are 5% below where we were last year. So new listings is actually down a little bit. Pending sales, how many homes are going into contract? It's a good indicator of demand. Do we have more demand than last year? Do we have less demand than last year? And right here, it's actually a little bit less. So almost 1.8% less pending sales this time compared to this time last year. Now, what's the speed of homes going off the market? This is a little indicator of, once again, demand. Okay, there is less pending, but if homes are selling quicker, it's showing us that there are more buyers out there. Maybe there is a little bit more competition. And this is an interesting little chart where we are rising up compared to last year. So 3% above last year, 39.9% of homes here in San Diego have seen going under contract within the first 2 weeks. And now total active listings, this is the new listings plus listings that were on the market. We were well above where we were in previous years back here in the kind of that June timeframe where we're about 37% above last year. Now we have dropped down to just over 16% of active listings above last year. So still well above last year, which is really good and kind of indicator of where we are as far as in the market, as far as the number of buyers out there, a little bit less, but this number is coming down partially due to new listings dropping, but also it could be more buyers in the market taking some of these homes off the market. And they put it in weeks supply of inventory instead of months supply. But we came down here at the beginning of August, and then September saw a little bounce up. So you might see a little back and forth, but right now week supply is 14.4 weeks. So up over 2 weeks compared to last year. So just over, that 3-month time frame. So when we're talking months supply, just like this, about 3.5 months. When we were back here, we were right at that 4-month where I said we start getting a little bit more into a buyer's market. This was once again in that June, early July timeframe. Since then, we have seen a little down, and now recently we did see a little bump right here. So have we seen any effect on home prices right here in San Diego? Here's a huge spreadsheet. I have San Diego lit up. Let me bring it up above my head real quick here. But it goes back 20-year, 10-year, 9-year, 8-year, all that kind of stuff. But let's see where we are recently. And going into, let's start with a 5-year shift. We are 45% up. 4-year, you see it's trending down a little bit. A 1-year shift, we're actually down 2.81%. And this one you can see is month over month, down 0.78%. So prices have seen a little bit of a drop. We're down from the peak of the all-time high, about 3.60%. But according to the Redfin data, the median price is up a little bit. So that last data set was through August. So it was kind of in this time frame. This is a 4-week moving average. Right here at the end of August right here is when we did see the bottom, and then this actually was the very end of August. It did pop up a little bit, and then we are up a little bit in the beginning of September. Median sales price, $925,000, about 3% above last year. So we're gonna keep an eye on what's happening right here in the San Diego real estate market to see if these interest rates, we have been saying, once they go under that 6.5% range, we're gonna see more buyers in the market. Now, this is a traditional time where we see not as many buyers in the market and definitely less listings, as we showed you here earlier. So likely that's gonna continue down. So if new listings continues to come down and interest rates even stay where they are, just right 6.13%, we're gonna see more buyers come in the market to take up some of that demand. So we can definitely see a little bit more of a gap as far as supply and demand, which would put a little bit more pressure on prices right here in San Diego. But we're gonna keep a close eye on that. If you guys are thinking about making a move, whether you're buying or selling right here in San Diego, and you want to start that conversation, I'm Chris Erickson, and we got a real estate crew right here in San Diego. We would love to earn your business, but feel free to reach out, call, text, or email, because we got your back when making the move here in San Diego.